AIFMD is one of the best performing tools in the European regulation, and it helped small-medium enterprises in Europe to raise a considerable amount of capital. In this video, we have packed the latest regulatory intelligence on one of the new European regimes introduced under AIFMD II, which is the one of the liquidity management tools, or LMTs, and we'll look into details at what's in store for fund managers. AIFMD II, for the first time, impacts or extend its effects also in the UCITS ecosystem, and this is because the regime on liquidity management tools will be applicable also to UCITS funds and not only to alternative investment funds. Liquidity management tools are not new, they were already in existence and used also by UCITS funds. And in the context of this regime as introduced by AIFMD II, the role of ESMA will be not only to introduce guidelines on the selection and calibration of these liquidity management tools, but also the second level regulation on the LMTs and their functioning. The idea is that liquidity management tools come with this new regime along with a new awareness on liquidity. There are two categories of liquidity management tools: the quantity or quantitative based and the anti-diluting LMTs. Now, this type of LMTs existed already, they were used already together by UCITS funds, but the idea is that under the new regime there would be guidelines or restriction for what concerns the selection and the combination of these LMTs, and at the same time there will be the need for managers to disclose about the LMT they have adopted, as well as to have governance surrounding the deployment of these LMTs. LMTs should not be seen or analyzed in a vacuum because they are part of the broader liquidity risk management process, which is a responsibility of fund managers, and they have to be guided in a way in choosing the LMTs within the perimeter that is designed by the regulation. So the idea is that there should be one LMT of the quantity base and one LMT of anti-diluting nature chosen for each fund, and it isn't really possible to define ex ante for all type of strategies which LMTs can be selected, if you like, because strategies are different with different liquidity profiles. At the same time, if you manage a money market fund, you only need one liquidity management tool. Now, it is interesting to see that the new regime on liquidity management tools poses emphasis on disclosure. Pre-contractual documentation of funds should contain accurate disclosures and information on the LMTs chosen, why they have been chosen, what's their objective, and how they function, and when they kick in, if you like. And this is because liquidity is to become one of the deciding factors as well, or amongst the deciding factors for investors to choose an investment over another. And the idea is that liquidity doesn't really become an issue only in extreme market circumstances, but liquidity is an issue also under normal market circumstances, and investors have to have a clear understanding of that. The second aspect that is relevant in terms of this new regime of liquidity management tools is the one of governance. So as there is governance for the liquidity risk management process, there is governance also for the LMTs. And governance means the usual things like all the arrangements related to the deployment, the review, the testing, and also the part of the management that are involved in the arrangement and the functioning of these liquidity management tools. Governance shall be proportionate and commensurate to the type of strategy, the complexity of portfolios, the investment sectors, and so on. And this is a relief because basically there have to be different measures depending on the type of funds. The liquidity profile is at issue, if you like. The main takeaway that we get from this new regime of liquidity management tools is that liquidity is not only an issue in extraordinary market circumstances, but also under normal market circumstances, and it is for investors to accept without stigma that some of these liquidity management tools can also be used under normal market circumstances. If you made it up to this part of the video, I wanted to thank you and invite you to hit like to the video and subscribe to the channel. There is an extended version of this video for our subscribers on Substack, where we delve a little bit deeper on some of the topics we have touched already upon in this video, and so I hope to see you there.